Hi everybody, Jeff Yastine for Total Wealth Insider. Well, if you're tired of these down market days, if you want to know when the coast will be clear to go back into the stock market again, my advice is to watch the corporate insiders. You know, it was only last month that Trim Tabs, which is a research firm that monitors this kind of thing, said that one cautionary sign for U.S. stocks is that corporate insiders have accelerated their selling of U.S. equities, end quote. So the gist of the report from Trim Tabs was that corporations were buying back record amounts of their own stock, but as for executives' own personal holdings, they were not also buying their own company stock. Instead, they were selling. They sold about $10 billion worth of shares in August and another $6 billion in September, which was the largest volume of sales for that month in a decade. So keep in mind, of course, corporate insider selling happens all the time. Executives receive stock options, and then when those options are in the money, inevitably they're exercised, and that means sales of stock by insiders. That's why monitoring insider selling isn't that great of a market timing tool, except when it hits rare extremes. But as for insider buying, give this market a little time, because I believe that if it moves lower in the weeks ahead, it is inevitable that it will move down to a level that will see a burst of buying from corporate insiders because stocks will have become too cheap. So my advice here is to wait and see. When it happens, it will be time to pounce. As Total Wealth Insider Senior Editor Brian Christopher has long noted, study after study proves that it's a smart move to follow the insiders. In fact, Brian is soon to roll out a trading service that's based on this very trend. Now, University of Michigan finance professor Najat Seyhoun, who's a veteran researcher of this topic of insider buying, noted in a book that he published in 1998 that insider trading can provide valuable investment advice, unquote, and is, quote, more informative than most other valuation yardsticks in practice. So what is the most informative, the most predictive type of insider buying to watch? Well, according to the research, if you want the odds to be most in your favor, you want to look for large cluster purchases that are made in the open market for cash. In other words, executives are not using options or those sorts of things. And typically these are stock buys that are made not just by like a CEO, but other C-level executives, such as a chief operating officer, a chief financial officer, as well as directors of the company, where they all come in and buy stock in the open market with their own money, all within weeks or a few months of each other. A good example of this that I saw was late last year, Fossil Group, the symbol is FOSL. This time last year, you couldn't find a more out-of-favor group of companies than companies that made traditional watches like Fossil. However, I remember watching a number of insiders coming in and buying shares of Fossil Group stock in August through September and November of last year. A quintet of executives all came and bought at between $6 and $8 a share. All told, they put in more than $1.5 million worth of stock purchases. And did they know something? They sure did. The stock, as you can see from the chart, zoomed from just below $7 on December 1st to more than $31 on June 25th, just 7 months later. So if you want to know when it might be worth dipping a toe back into the stock market again, keep an eye on those corporate insiders. Remember to keep liking us on YouTube, on Facebook, and to read our material on banyanhill.com. I'm Jeff Yastine for Total Wealth Insider.